KPIT Tech is the other one that we're going to focus on. The stock on the last couple of days corrected. But the performance of the third quarter has been good. Constant currency revenue growth is up both sequentially on a year-on-year basis. Deal wins are also up 20% plus in the third quarter. We have Mr. Sachin Tikekar, President and Joint Managing Director at KPIT Tech, joining us right now. Sachin, good morning. Great to have you with us here. Thanks for your time. It's been a strong quarter. So growth has come in at about 4.5% constant currency, Q on Q. But immediately, I think the question which comes to one's mind is, we just, for example, had the Tata Tech management with us. There we saw a very large ramp down by their second largest client. If you look at the largest player in the global EV ecosystem, Tesla, that is disappointed revenues. I mean, I think there is a bit of a scale down happening there, maybe temporary. So the question to you is this sustainable, the growth that you've done?
No, great question. The way we look at our business is the propulsion side. The electric vehicle part that you talked about is the propulsion part of our business, and that's the largest business. Having said that, bulk of the growth is also coming from software-defined vehicles and in-car experience and off-board services. So, all these three things put together, that's the composition of our total business. Speaking specifically about electric vehicles, there is a slowdown in growth of electric vehicles as compared to what we witnessed in 22-23. However, our business actually depends on building the production programs and not necessarily how many cars are produced at any point in time. So looking at some of the OEM commentary in the recent past, they have inventory and they want to make sure that they get rid of the inventory. So the production level may go down for some time. However, that doesn't impact our production programs. Our production programs working with them on electrification typically start 3 years in advance. So we are already working on some of the production programs for the SOP year 26-27. That work continues for us, and that gives us the confidence that we'll continue to see growth in this area in the foreseeable future.
So I think what the street really liked is the fact that you said you will be able to meet your revised higher guidance for the full year. But there are some brokerages that believe that given the kind of traction that you're seeing, you could even exceed your full year guidance for FY24. Is that a possibility? And what do you think the early signs of FY25 look like in terms of growth?
Okay, let me take one question at a time. As far as this year's guidance is concerned, we revised our guidance from 28 to 30% to 37% last quarter, which is unusual for us because we just do that in quarter three. We now believe that we'll do 37% plus. So that's the confidence that we have in the current financial year. As far as the next year and beyond is concerned, we do see profitable growth coming our way, just based on the engagements that we have with our existing clients and the conversations that we are having with 2 or 3 other OEMs. So we're looking forward to exciting times ahead.
Okay. So now just one follow-up here. Europe has been very strong for you, but the US revenue growth has been kind of tepid. I think it's not just the case with your own business, but a lot of your peers are speaking about that as well. Where are we in the cycle right now as far as the US growth is concerned? And what's the trajectory you're expecting?
So if you look at year-on-year growth for us in the US has been healthy. It's in excess of 20%. So we are happy. You've seen some drop in quarter, which actually depends on different programs at any point in time. US compared to Europe, you're absolutely right, has been slower for us. We do hope there have been issues in the US, as you know, with some of the strikes. OEMs have overcome those issues. We believe that there will be growth for us in the US as well going forward. There are 2 reasons for that. One is our engagement with the passenger car OEMs is looking solid in terms of the number of programs that they have and our engagements with them. And secondly, more than 20% of our business actually comes from commercial vehicles, mostly on the truck side. And we believe that US is the large contributor contributor towards that growth. So as we get into the next financial year and the year after, we think that we'll continue to see healthy growth coming from US.
Okay, all right. Hi, Sachin. Good morning. Congratulations on a good showing. Your margins have improved as well, and that's something that's happening, and that's something the street has taken note of. What are the levels you'll have in store to improve from here on? And where does it get, say, in the next 2 years or so? Point number one. And point number two, deal wins, yes, they're good. 21% higher in quarter 3. But year to date, actually, it's a little bit lower. What's the pipeline?
So let me take the bottom line question first, and then we'll talk about the pipeline.
The margin.
So the margins part. Margins, yes, there in the last 14 quarters we have had consistent growth in our margins, and now we always wanted to make sure that we get beyond 16% in EBIT and 20% in EBITDA. We have reached those milestones now. However, what we have done in the past is we have always reinvested more in future technologies, and that's what is really creating tremendous value for our clients. We'll double down on that part and make sure that we stay ahead of the curve in terms of our investments. We believe that there is scope for profitable growth going forward. However, the application of the additional profits would go more towards R&D in future. So if that answers your question on the margins, I'll talk a little bit about the pipeline. You're absolutely right. There is a quarter-on-quarter growth in the pipeline, and we are happy with the pipeline that we have. If you look at year on year, what has happened is we work with a handful of clients, and when we engage with them in a strategic manner, our win ratio goes up substantially. So the pipeline may look more or less the same. However, our win ratio has gone up substantially. So that gives us confidence that we'll continue to see profitable growth in the next few years to come.
So you're satisfied with your margins, right, Sachin? Just want to confirm that. As of now, you're satisfied. The additional money that you'll get, you'll be reinvesting it.
Most of it, yes. We are very happy with the progress that we have made, and it just gives us additional levers to continue to make investments for future.
So just to wrap it up, Sachin, one of the things globally which is being talked about is that as subsidies, especially on the electric side, come off, and this is happening in US, it's happening in Europe, it's happening, of course, here in India as well, right? There's a bit of a boost initially, and then subsidies taper off with every new technology. How critical is that, and will we, as that continues to happen in the next few years, will that is that a large factor for in the push, or you think we've reached a stage where it's takeoff with or without government subsidies?
You're absolutely right. I think in some countries there is a takeoff with or without subsidies. I think there are environmental reasons and there are many other reasons to go the electric way. And I think we are reaching a point where there is enough now. I think there is the prices of the electrification will continue to go down over a period of time. And the cost of the electric vehicles will also continue to go down as all the OEMs reach critical mass. So there is no turning back now on electrification. There are always, year on year, you'll always see some ups and downs in terms of the number of vehicles being sold. Last couple of years have been really good. So compared to that, I think the growth may not be as much in the next year or two. However, if you take a longer term view, as more and more technologies come in play, electrification will become more efficient, number one, and number two, also more cost effective.
Okay, all right, and that's where you come in. Thank you very much for joining us, Sachin. Great conversation. Appreciate your time here on CNBC TV18. Stocks up, I think, at the day's highest point. Last couple of days have been a little down for KPIT Tech.